All right, let's jump into it. Where we at? It is 10:45, 10:46 now on 1st of November. So that's another week obviously done, another month done. Could have sort of probably ended up sort of contributing a little bit to some of the moves we saw just in the super late part of the session. You know, I'm obviously sort of kicked off by that stage and that, but as I always sort of say with these things, I pretty much disregard the last 4 hour candle of the week and that because I mean nobody's around. Asia's well gone by then. Europe's obviously sort of wrapped up and that. Well, actually, I'm not quite sure what time they're sort of wrapping up in that nowadays. But I think probably we saw a bit of movement around 3 o'clock, so I wouldn't be surprised if that's probably when we see London sort of closing for the week. We saw gold drop off a little bit there. You know, and really, you got the last little stragglers, probably the younger people and that are on the desks actually over in the US. So I kind of disregard the last little bit of it. But you know, we'll see how we go in that. Obviously, you have a quick squiz through what sort of data we've had through the week, what we've got sort of coming up. It was a pretty big week in terms of sort of like central banks and that meeting and that. Obviously, pretty much all congested into the sort of the last two sessions of the week, pretty much within a almost a 24-hour period there, because we had BOC cut as expected. Pretty much everybody came in as expected. I will sort of preface with that. Cut 25 base point. Fed cut 25 base point. Uh, Yen, well, BOJ, they sort of held, and ECB, they held as well. So a bit of a mix when you sort of take all four into account there. But it is, there was no sort of shocks. There was no sort of like, oh, wow, we think they're going to hold, but then they cut or anything like this. So, you know, kind of as you would sort of take this sort of stuff, sort of, I would say, priced in with expectations and that. And obviously, the sort of the standout of this sort of one, particularly with, you know, I'd say probably with everybody, but you know, obviously this is my my analysis. So, doing what I sort of was more looking for was obviously the Fed. Excuse me. They had quite an interesting sort of. I covered this yesterday on the video and that, so I won't go too much into it. But you know, there was a weird sort of, not weird, but like a different price action leading into this, which I said at the time, I said beforehand as well, that sort of like, yeah, I think this is a bit of a tell of what was happening because, you know, if we look at sort of the price action of DXY, just US dollar, sort of leading into like these sort of previous cuts, um, the market has just absolutely sold the crap out of it. This time, it actually was near its highs. Like it sort of had a little bit of a dip early in the week, but more or less than that, they were buying it up right into the rate decision. They cut, which was expected, and price moved up afterwards anyway. And obviously, sort of ended the week on the highs, and in breakout, not full breakout territory because we need to get above 100 for DXY in my opinion, but you know certainly we popped through a crucial level. So you know what I mean. It's a little bit of a different price action that we've sort of seen previously, and basically if you unpack it, it's just the market going, okay, that's fine. We get it that they're cutting. We knew that. What's our outlook sort of you know towards the end of the year, first quarter of next year? That's kind of what people are more interested in. Yeah, they're cutting, but as you saw with these sort of things here, you know, the BOC they cut, that's fine. Aussie RBA, obviously, we've got our rate decision on Tuesday, but I think that's pretty much in the bag of a hold due to the CPI, which again is probably the only other bit of data that really was of any relevance through the week. And as you can see, that came in hot, like very much like a big push up. And that, if you look at these numbers, like 3% expected to go to 3.1, so they're expecting a little bit of a tick up. But in the last two prints, or last three prints or so since July, 1.8 in July. Now we've just had October 3.4. Yeah, that's a big jump. I mean, look at all this sort of progress sort of coming down here, and then it's just skyrocketed through there. And you know, quarter on quarter is a big one that Bullock has been touting because sort of like you know they sort of say that you know the quarter on quarter is a little bit more sort of like flattened out. Like you know you can get particularly sort of like you know with a lot of the energy sort of pricing and subsidies. You know, there was an issue. I think I put a post up about this about 2 months ago, 2, 3 months ago. I don't know. It was a little while ago, where people were supposed to be getting some sort of rebate but it was supposed to be coming in, August, but then they got it in September or something like it. I can't remember what it was, but it was something to that sort of effect, and that in which they sort of didn't get the subsidy, so they had to pay the higher price. Okay, well, the higher price that then gets filtered into the numbers, and obviously that gives you a spike in CPI because it's like, oh, hold on, wait, last month we were paying this much, but now we're paying twice as much. Well, let's factor that in. And so what they're sort of saying is that sort of the quarter on quarter kind of smooths that stuff out. Obviously, then takes 3 months, and you can sort of see a bit more of a sort of more rounded approach towards it all. But as she was saying, I mean, look, if we look at these numbers down here, 0.2 now up to 1.3, like, it's obviously still in quite a steep push up there as well. And how is it relevant? Well, you got to sort of think they've got the dual mandate, they've got the unemployment, call it jobs on one side, keep the economy sort of ticking over. That's one side of the equation. The other side to balance that with is inflation. We've seen unemployment also tick up. So we had a big, I think it was it last week or the week before, something like 4.3, 4.2 to 4.5, and I think 4.3 expected. So again, it was a big jump up in that. So you've got this sort of situation with the RBA, which is effectively kind of sort of stagflation, where you've got an increasing unemployment rate in which you would, if you were to take, if that was your only issue, fine, whatever, cut rates. That's the tool, so to speak, is what the RBA sort of used to sort of address that side of the mandate. But the balancing act with that is if you have inflation moving up on the other side as well, because obviously the more you cut, like think about it as a pie. You got a pie, you got 100 pieces in the pie. Just because you sort of add, another 50 pieces in there, it doesn't mean the pie is at 150. Like it's not 1.5 times the size. It's just every one of those individual pieces is a slight bit smaller to accommodate for this extra lot that's come in. And that's a very sort of basic way of sort of how these sort of things work with sort of like, basically lowering interest rates because it increases the money supply because it incites people to borrow because you're going to borrow while the money's lower, like the sort of the rates are lower, to then hopefully use for good debt, good borrowing, stimulate the economy, employ more people, and that's why sort of like when the unemployment rate goes up, they reduce rates because the thought is that these companies will sort of go, okay, look, you know what, we can borrow more money, well, we can ramp up sort of maybe production a little bit. With that, we need to employ more people. Bang, brings unemployment down. So that's one sort of side of it. But again, as I said, the compensation there is obviously that those pieces of the pie are a little bit smaller. So now instead of your $5 for your coffee, it costs you $5.50, whatever. That's inflation coming up on the other side, and you obviously can't have that running out of control as well. So they're in a bit of a tough position at the moment because what do they want to tackle? Do they want to tackle the unemployment rate going up, or do they want to tackle inflation going up? And that's always the big question. And that's what all these bits of economic data that come out are. It's just putting it in one camp or the other camp. Are they going to sort of, because you address inflation in a completely 180 different direction than you do to jobs and unemployment. Unemployment and jobs, as I said, you just do you cut rates, and I mean, in very simple terms, that's what they do. But inflation going out of control, well, you obviously don't want to sort of cut rates because, as I said, if you cut rates and that inflation, the pieces of the pie get smaller and the inflation goes up. So what do? They hold rates, or they're not about to raise them, but if jobs weren't the issue and inflation was going out of control, we raise rates. We saw all this after COVID and all this kind of stuff. When inflation's going out of control, what do? Rates went higher and higher and higher and higher because again, it's the opposite reaction to what companies might do at a lower rate. Lower rate, you'll borrow money. Higher rate, well, I'm not going to borrow as much. That's fine. Maybe incites people to save a little bit more. It reduces the money, sort of the money supply in the system, and that hopefully will bring down, well, I mean, effectively over time, and that brings down inflation. So the question is, what do they want to tackle first? Because they've got two problems here at the moment. You've got on one side, you've got the jobs, unemployment moving up. On the other side, you've got inflation moving up. As I said, if it was just one, it'd be easier. It'd be a bit more of a straightforward idea as to what they're going to do. I think inflation will jump back in the front seat, though, just due to the rate in which it is progressing. And I think this is why, you turn on a lot of the news and the TVs and all this, and the rate cut sort of hopes are dashed for this Tuesday and probably through to the end of the year. Because although you've got unemployment at a higher rate, inflation is probably in its own little realm accelerating at a, if they're both bad, that's accelerating at a worse at a worse speed. I mean, look at these numbers: 3% up to 3.5%. 0.7 up to 1.3%. They're big jumps. And with those sort of big jumps, I think they're going to say, hey, look, this is out of control. We can't cut into this kind of accelerated, and that's what it is. It's not just increasing. This is accelerated inflation. And so we're not going to, they're not going to hike, but they're definitely more likely to hold, which is the middle step. So, the hold, see what happens. That's the kind of outlook and what we're probably expecting. And how does all this relate? Well, obviously that gives some sort of strength to the Aussie dollar, and that. So, if they're cutting, most of the time, you will see that the currency will lose value, move down. Obviously, the opposite happened, as I said, with the DXY and the US dollar this week, and that's why I was saying that it was a different lot of price action, and that was the tell. You know what I mean? I shorted Aussie from what were you up over 66 or something after we had that CPI, and sort of that played out very well this week because we were seeing that the market was buying US dollar despite sort of well, I mean, it was buying the Aussie as well. Let's be honest. Like the start of the week, Aussie sort of moved straight up. But as I've said a couple of times in that, particularly with Aussie, they don't care about the local data as much. Like, that's all very well, and we've got all this sort of stuff going on, and that's fine, and that's how fundamentally the sort of economic approach will be from the RBA. But if the market consensus is to buy the US dollar, and we can tell this by DXY moving up, even though Aussie is not part of DXY, you take it as a barometer for market sentiment towards the US dollar. If the market wants to buy US dollar, hot inflation is not going to save the Aussie. It's not. It's going to sort of maybe reduce the amount in which it gets sort of slapped to the downside, but it's not going to save the Aussie. And so this is why it's important to sort of see what happens with this breakout or move when DXY comes into 100, because that's going to be a big level. It's a big psychological level. It's a big technical level. And if it moves up above that, I think we do have lower Aussie. Not as bad as if this wasn't happening, this inflation, but, excuse me, I do think that we have that a bit of downside to come with Aussie, especially and confirmed if DXY breaks over 100. So it's not everything's a guarantee that, hey, Aussie's going down, but the thing is, it's sort of like, you might sort of sit there and go, but inflation's up and they're going to hold. So, that should be Aussie dollar strength. Yes, it should be. But if the market consensus is to buy US dollar, that overrides the local Aussie data and Aussie, what should be Aussie strength. It'll hold Aussie up from sort of like getting, completely pummeled, but it will still succumb to US dollar buying because they don't hold the same weight on the global stage. It just doesn't. All right, anyway, rant out of the way. That was this week that we've just had. We've got the new month coming up now. All right, so a bit more daylight saving shifts than that this week. So you got to recalibrate all this kind of stuff again. Was that just this week past? Yeah, wait, yeah, that was this week. I was about to say, I thought that was like, nah, this is it. So daylight savings over in Canada and US. So again, you got to sort of recalibrate things again. I think that's everybody done now. I think there's three waves. There's sort of Australia, then there's Europe, and now obviously the US and Canada, yada yada, for whatever Canada's worth. But anyway, it just means everything. I think everything's pushed back an hour. So it means sort of like particularly end of the week, those last bits of data. We look at what time these things are coming out. If we get non-farm, that's another thing that we've still got the US in shutdown. If this were to be coming out, this is coming out at 12:30, which is makes trading in Australia really undesirable through summer. Because I mean, Friday 12:30, and you're getting your data out. Come on. Anyway, whatever. Let's tick on. So we got daylight savings happening. We got bank holiday in Japan. These are always fun to sort of see what they've got. Culture Day. Oh, beautiful. These guys, I mean, they obviously sort of seem to work quite hard, but they do have a lot of sort of fancy days off. Anyway, so a bit of Aussie data kick off on the Monday. Nothing that's really going to sort of be sort of market moving. Again, low level stuff. It's interesting to sort of see what they're doing. These kind of sub building approvals I always find interesting. They go up and down. I mean, look at this chart. It's up, down, up, down, up, down. Yeah, you can't. How can you take anything away from this except for the fact that, yeah, look, they're expecting a push up. Okay, but the swings, there's no consistency. That's just ridiculous. I mean, it's almost every 1 or 2 months, it's a complete 180 swing to the other side. That's ridiculous. Anyway, I mean, there's a whole nother thing I could say about sort of Aussie economy and shit like that. But anyway, we're here for economic stuff, or at least the economic calendar and charts. Look, ticking along again. Nothing of note through Monday. Monday night, 2 o'clock. Great. ISM. So these are the ones with the 50 benchmark and that. These you will get because this is private data. This is sort of like they survey a bunch of managers or something. I'm pretty sure. Index based, yeah, purchasing managers, manufacturing industry. So obviously, yeah, a snapshot of how the manufacturing side of stuff is going. But because it's not a government um, bit of data, it's coming from like a survey of companies, we will get that data. But 50 is the benchmark there, and obviously further away from 50 is expansion, and further underneath is contraction with it all. So looking like a little bit of a tick up there as well. I haven't actually sort of been paying so close to, because we haven't had much data coming out. I haven't been paying so much close attention, so I've got to sort of recalibrate myself a little bit with what's happening with the US data at the moment. But all in all, it's not shocking. So that's dollar strength in that sort of camp of it all. Ticking on, we got Tuesday. So Tuesday we got public holiday, but only in a couple of states. So it's the race that stops the nation, but it doesn't just stop the nation; it stops the state. So anyway, just sounds better. Race that stops the station. And here we go. So this is the cash rate. So from the RBA, and expectation, obviously, as I said earlier, ranted on about, is a hold at 3.6%. So yeah, we'll see what happens. Press conference. Actually, did I? Oh no, Bullock. That was talking. That was last week, wasn't it? So press conference and that. Obviously, we'll get Bullock talking after that. So give us a bit of insight as to what their sort of thinking and thoughts are with that. As I said, most likely we're just going to see a hold through to the end of the year. Bowman talking later that night. The name just jumps out because we know that she's one of the dissenters. So again, look, I haven't been paying attention to this stuff because we haven't had a lot of US data, and without the US data, like people sort of trying to get little snapshots and that of what's going on with them all. Um, I suppose we did have, sorry, in saying that, we did have Powell speak the other day. So we are seeing little bits and pieces, but general data, we're not sort of getting so much. We do have jolts, of course, tentative here. Trade balance tentative. Again, this is all predicated on the idea that they do resolve the shutdown, and that's another thing that I sort of glossed over there. But the shutdown kicks on. It must be almost up to equal length of longest shutdown. I think 35 days, or 35 days was the longest that they'd had. That's still moving on. I don't think it's actually hurting anybody in terms of sort of public perception kind of thing for the sort of actual sort of Republicans, or well, maybe it's hurting the Democrats a little bit more, but it's certainly not hurting Trump's approval ratings. And with that, I don't think he's in any rush, and he doesn't seem to be doing anything or even mentioning it to try and resolve that kind of stuff at the moment. So that could kick on for quite a bit longer. But I really haven't heard anything in terms of progression towards, hey, we've almost found a resolution. And it's made for not an interesting, we'll call it an interesting sort of trade environment because, we can rely a little bit more on price action and flow as opposed to, necessary sort of perceptions of stuff. But we did see how much the market jumped over the Xi Trump conversation meeting the other day. So, the market's still hungry for stuff, but lack of all this bit of data, that bit of data, it just takes out some of the knee-jerk reaction, price action that we see sort of through the week. Anyway, that is expected to be slightly down for what it's worth. Moving forward, unemployment rate over in New Zealand, again, for what it's worth, slight tick up, 5.3%. So look, Aussie, as I said before, in that 4.5%, and everyone's like sort of chomping at the bit with it all. These guys are 5.3%, and they've been cutting very aggressively. The New Zealand dollar's been absolutely blasted, actually. Maybe I'll have a quick squeeze over the chart later. Balance of PMIs and that's from Europe. Okay, ADP, negative 32, expected at 28. Okay, if it comes in, slightly positive. If it comes in, are we going to get ADP? Actually, we do get. I think do it. I think we do get because this is the it's excluding farm industry and that from the government. So yeah, this is the private stuff. So ADP, slight tick up. NFP is a culmination of ADP plus government jobs as well. So it's a combination of the two. ISM services, again, look at this, 2 o'clock. It's just ridiculous trading. I've got to move somewhere else during summer because this is just stupid times to be sort of trading and getting bits of data out. It's kind of like close your eyes and just go for it. Anyway, point is that they're looking a little bit against another one of those ones. 50 is the benchmark and that, and so both looking a little bit dollar positive there. ADP, I would say any sort of progression move up again is also dollar positive. If we do see that, we got BOE, BOE, so coming later in the week, and they're looking to hold their rates as well. Weekly, geez, all these bits of data we just got used to not having. They don't even have a previous, they don't have an expected, it's just tentative, okay, maybe. And then sort of ticking forward through the end of the week, if we get it, we got NFP. Do they have a number for NFP? Nah, of course not. So no number there. So yeah, a couple of holes in that, but if we sort of have a quick squeeze back over it, really RBA on Tuesday's the main one. Then you've got ISM, ADP, and that's about it for data. Yeah, we're actually going to get. So we've got ISM here as well. All right, cool. Interesting enough. Let's get onto the charts. DXY, this is what I'm talking about. Bang, breakout. This is quite a significant level as well. It's that one that we've had marked out for quite a while in that, because obviously, look, on its way down, like way back when, we're talking back in June, this was obviously a bit of a resistance point. Market tried to hold it a little bit, danced around this area for a little bit. So it is somewhere, it's not like the be-all, end-all breakout of stuff. I would say this little spike up here that we did get sort of in sort of August, before that last leg down to the bottom, I think this is going to be your major breakout because if you jump onto a higher time frame, that's almost like a bit of a double bottom in this sense here. Here's your bounce high, so you swing high. There's your bottom here. As you can see, I've got it marked out already that your measured move will take you back up to 10, call it 104 pretty much. Yeah, 104 for that sort of measured move. Look, it's not going to go there in one move. You're going to get a little bit of trouble, headwind, and that should we get up to 101.70, 101.80, this kind of area over here. That'll be a next level that like really watch the dollar fly if it gets above this. But point is that as you can see with this, bang, 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 it was a solid close up above this resistance area. You can see it better on this daily here. Resistance, yeah, okay, we got above it back here when we thought, hold on, wait, it's all over, and then slapped it on the bottom. Slapped it on the nose and that back down to the bottom. And now it's recovering here again. So look, RSI is looking pretty healthy to sort of continue this move. The close above here was not too bad. Friday's session was very quiet though, particularly through Asia. It just sort of grinded and yeah, as you can see, it's sort of like it's sheepishly moving forward, but it is moving forward. So, dollar, as I said, disregard that last candle, it's still looking pretty bullish. I mean, have a look at this on a weekly. I mean, that's pretty much like a breakout on the weekly. And as I said, 101.50s, like those wick highs up over here. I do have another DXY chart. Which one was it? This could be a larger channel, sort of thing. Yeah, so I mean, look, this is coming off. I mean, this again, look, I'm flying between different charts and time frames and that, but as I said, look, you're getting some pretty decent sort of movement here. It was a little bit hot on the RSI, but again, look at this. It can stay here for weeks and weeks on end. This is on a weekly time frame. It can stay overbought in these areas here for weeks on end, and this is obviously quite clearly a sort of strong bullish candle closure kind of thing, way up above this. This is the highest close we've had. Well, technically since this, because that's the close of that big candle. So it's the highest close we've had since May on a weekly. I would say that this has definitely got more movement in it. I mean, that's a nice little look there. And we're sort of seeing potential sort of move up. Okay, let's go back to the actual chart. So where to from here? So as I said, I do believe it's not going to be a straight cut. I don't think we're just okay. Here's the close here. I think certainly we are in for some more dollar strength, um, but I think it's going to be sort of it's going to be a hard fought battle as it moves up and that. So first target is really up around these highs that we had back in August, as I said earlier. And I think that's going to be your big sort of breakout move. This level over here technically is a level. I mean, this is some weird candle where it sort of massively gapped up and then sort of obviously sold down for, 3, 4 weeks afterwards and that. So it's a bit of an odd sort of candle there. Was that end of May? So I'm sure there was something. I can't remember what caused that, but that was was that maybe around the war, the Iran thing? That sort of dropped out of the news very quickly, didn't it? They bombed them and then no one's heard anything from them for months. Anyway, whatever. The chart is, I would say, yeah, look, it's still around 100. I'll push back, second effort through there. We're looking up around 101.50, but realistically, I don't think that level is going to be the one that holds it. I think if you break 100, really you can bank in up to 108. Sorry, 108, 101.8. I think this is just going to be more of this kind of stuff, which will be a bit of a sort of a reason for to see some profit taking, a target, and these pullbacks could come a lot deeper than this, mind you. This is just a general idea of the pushback. It could be like that. Could be a move like this to sort of get through. Who knows? But the idea is generally, I think, US dollar strength to continue. Excuse me. So slowly dying into the mic. Anyway, point is that look, I still think we've got some US dollar strength to come here. 100 is the short-term target. See what happens when it gets here. A second push coming through this zone. I think that's going to be the time that we sort of see a bigger sort of breakout. And you're going to start to hear and read a lot more articles about the US dollar. And remember, when US dollar gets on, this thing has taken a long time to turn around. Look at these other times. I remember these sort of turnarounds. That felt like an eternity. And look at the resulting moves afterwards. This is a big base that it's had coming around here. So I think, look, certainly 102 is going to be a big breakout level, but that's not happening tomorrow. So I would say most likely you're going to see some US dollar strength. Well, I'm going to be playing US dollar strength into the coming weeks till we sort of see some sort of maybe sustained push back down. Really underneath, I mean, you could call it a fail under here, maybe underneath this sort of trend line. But I wouldn't be surprised. Anyway, we'll deal with that when we get to it and that. But for the time being, above this sort of 99.40 area, which was that sort of resistance, till you break back down underneath that, I think we could probably still have some dollar strength to come. But short-term target up to 100. All right, so let's fire on. We got gold. So gold, it's a bit of a contradiction to the idea of the US dollar strength here. But if you hear me out with this, I think that we have short-term strength potentially with short-term strength with the US dollar. But once we hit that target, I think we sort of maybe see a little bit of a flow into gold. I think we see some short-term upside to gold, but ultimately down. So gold was an interesting one this week because obviously, like, I mean, it really chopped around. Actually, sort of typically I don't play both sides, um, but this week I did, and well, the last week and a bit and shit I have because these swings have just been so intense and so wild that it just suits my style perfectly. I'm not a buy and hold. I've got a general theme and a general idea and a direction that I want to go with things. But while it's particularly in these sort of turnaround ways, you could sort of trade both sides of it all. And we saw some big moves, obviously with the FOMC. We saw the fact that it broke this daily level. Come on, let's get the 4 hour at least. You saw this break of the 4 hour and then sort of chopping all the way around here. So look, it came back up here. It's got this level that we do have marked out here. It's sort of 40, 30, this kind of level here. It's taken out the highs, sold down, second effort, failed to close above, and then into the end of the week we saw just a little bit of a dribble off here. And this is why I'm interested about this movement here because it does feel like we had, and I covered this yesterday. There's a little thing to show this. We've got a low here, and then we've got a low here. So when you're coming in a downtrend, you get your bounce up. That's fine. I cover this all the time. Down, find support. Up, find resistance. This is the third leg that's very interesting because this is the third leg that's going to tell you where it's going. It's going to say, okay, well, either double bottom, then it's, potential for a range or a reversal. You're going to see lower low, which is obviously continuation down there, or you're going to get a higher low, and higher low is what we got, and we saw price push back up. And so technically, if you look at this little move here, we got a higher low plus a higher high. It failed to close over that, but this is the end of the week in that. So, I'm not really sort of committed that this is okay, that's a fail, and that we're definitely going to roll down. I mean, we could definitely still see this thing dribble back down over to these levels over here. And as I said, ultimately, I do think we come down lower. But what I'm open to the idea of is a close above 40.30. And then a close above 40.30 looking like a fairly quick move because you got to remember these charts generally replicate themselves a little bit. And it moved very quickly down through this area from, say, 41 down, well, basically all the way down to sort of 39. But we're talking about this area here from 40.30. So up above, say, 40.30, or close above 40.30, I think that'll sort of clear out this area, confirm that move, and then we can start to look back up towards, call it 41, but 40.90, 40.90 all the way up to 40.40. Up to 40.40, obviously these things are dependent on the speed in which it comes in. If it takes, another 2 weeks, it could, and it grinds, from a technical standpoint, it may go higher. But I like the idea of this kind of horizontal through here. I like the idea of sort of retesting the sort of underside of this daily trend, this big white line here. But again, with these things, you can see that sort of breakdown point, which is 40.60, 40.50, 40.60, this kind of area through here. That's going to be a bit of a headache to get above as well. So close above sort of 40.35, close above say 40.70. And I think that opens the door to this last little move up here. But as I said, I think this is more just, it's broken the daily trend. This to me would be only just a bit of a bounce to retest the underside of that daily trend before we commit to this move, which would be the bigger move coming down here. And then that, obviously, the first move of this is then, again, same sort of thing that I say. Think about it just on a larger scale now. You've come down, you found support. Oops, whatever. You move up, you find resistance. This would be then your third leg. And this is what I'm sort of trading towards, the idea of that we're in this leg here now, which is the second, which is the bounce. I do believe, and this will be confirmed, again, this is like you build it out through the different time frames, but a close above these levels will open you up to this move up over here. That's fine. But this is the leg that I think we're in at the moment. I think we've got bounce before we get this leg, which will determine what is really going to happen with gold. And once we sort of get to this level here, if we start, like as I said, I'll probably sort of look to start sort of shorting it again. Should we get up to these levels here, with the idea that minimum, you're probably going to get a move back down to, say, sub 4,000, but most likely you're targeting 3,900. Well, technically, look, you are targeting 3,900, but you're open to the idea that you could get a higher low, and it could be that. That could be the play. But you're targeting the idea to move back down to the lows because that's going to be your tell. That's going to tell you, are you going to get double bottom, higher low, lower low, lower low? Well, bang, the cycle starts again, and you do this. And we work on how low this thing can really go. That's the potential to it all. But, before we get to all this kind of stuff over here, whether it is a higher low and a reversal to move back up, I think we need to play out this structure. And so with that structure playing out, I'm targeting back up to this area here, in this leg here. This leg may not come up to this level, it may just come to here, but we will find resistance at one point. I don't think we've hit it quite yet. You could say yes, but I don't think so. And this is where sort of like fibs and that come in as well. It's a bit choppy here with all the charts I've got on, but if we grab this, where's it gone? This one here, this chart, this fib, we drag it from the highs to the lows of this pullback move. That's where we can sort of start to put a bit of a sort of a confluence of things together, and we say, hey, okay, here's 50% retracement. Excuse me, 50% retracement of that drop. Okay, well that's a reasonable level, and you can start targeting the lows after that. You got a horizontal where the market, just for general price, because not everybody's trading these Fibonacci's, but you can see, where did the market sell it from? Well, you can see right here. That's the resistance. Market sold it here. So this market sold it here. They sold it here. Well, what's going to happen if they get up here? Well, they're going to sell it again. It doesn't mean that it's the be-all, end-all, but the thing is, what you find with these things is when it takes a while to retest these things, they don't break first time. So regardless of it all, you're going to get a reaction should price get up into here. Doesn't necessarily mean it's going to come all the way down. It doesn't mean it's going to do anything other than sort of push back and then go even higher with it. Or like, you can't sort of predict these things. All you can do is react to what the actual price action is. And you use the idea of structure and sort of previous price action, where by that I mean sort of, you can see the market, once it got to 41.40, they sold it. 41.40, they sold it. 41.40, they sold it. What happens when they get to 41.40 again? Like, you don't need to reinvent the wheel. You just need to sort of see for whoever, whatever is moving the market, general market consensus is they sold it at 41.40. So should we get up there, that's where I'll be looking to sort of short it from, with the idea that we've got this third leg to sort of come and potential for this to then break even lower. But the idea is to obviously play out this bounce move, look for shorts, target the lows with the idea that we could break through there. And that'll be the big tell if we go underneath sort of the lows that we sort of found more recently, because it bounced right kind of on this zone. It goes underneath 38.80 or whatever it was, 38.90, 38.80, wherever that zone, this bounce is here. And if that breaks, then okay, we know we're going lower, and you certainly wouldn't want to be holding longs at that point. All right, let's tick along. We've got Aussie. So Aussie sort of come back down here. This is quite an interesting. If you jump right out onto high time frame, we're talking weekly time frame here. You got this falling resistance pretty much, which is kind of originating from 21, where we got up to 80 cents and that. It's funny, it's sort of like, I was trading Aussie long up around this time as well. And I remember going, woohoo, yeah, 80 cents and that. And I had a few people sort of make comments about, oh, it's bad for the economy, and the right for the economy is 60 cents or 65 cents or some sort of shit like this. I don't know, whatever. I think they're in manufacturing of some sort of thing. Maybe they make glassware or some shit. Regardless of all that, it's like, I'm trading Aussie long and Aussie's at 80 cents. Well, you know what? You care about, your glassware production or whatever. I was trading Aussie long, so I was happy about that. You know what I mean? But as you can see, this is what's given us a very big high. And it's pretty much sort of like online, tested it a couple of times here. It's getting quite close to it here. So, certainly if US dollar were to fall over and Aussie were to break above, say, 67, pretty much those last highs we had, 67 cents, that would be quite a considerable sort of move, and you could definitely see quite a quick move up towards 70 cents should that happen. I do think that this will happen. Like, I do think that we potentially will see a break higher, maybe over the next year or so. Um, Going in, as you can see, so just had a rough idea with the date down the bottom, maybe up through August. Once this breaks, okay, yes, I do think we could have something of a higher Aussie dollar. But this rejection, if we get back down onto a lower time frame here now, put on the daily, you can see that. Oh wait, did I have it on there? Oh, what was that time frame there? For some reason it doesn't show up on the daily. Okay. Anyway, this big blue line here got very close to it all. Confluence with this horizontal that we had, and market just dumped it. Bang, 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 bang. So very, very cheap, sort of sharp sort of pullback on the idea that, sorry, I should say, even with the idea that we had hot CPI and market expectation to hold rates on Tuesday. So came back down, still got that gap. This is the thing that I'm targeting, which is only, I think, got within like 20 points or so, 15, 17 points or so to close that gap. It found a little bit of support into the end of the week. But again, as I said, the last couple of hours, you kind of disregard a little bit. I think certainly it could potentially see a little bit of a pushback up over to 60 over here, back above sort of 65, 60. Then you could say, hey, look, here's your falling pullback and here's your falling resistance. Okay, it's broken through. However, I still want to see that gap close before anything sort of moves on there. I think there's a possibility to see a little bit of sort of, as I said, Aussie not strength, but not get absolutely bashed just due to that stuff that's coming, like, you know, the RBA sort of outlook. But again, as I said, I think if the US dollar breaks those levels and we see US dollar buying against all other major currencies, like, is the fact that RBA is just holding rates one time going to be enough to say, hey, yeah, let's buy Aussie and break out over here? I don't think so. It could save it from sort of being down, you know, down to these levels, maybe. So probably sort of sub 64. I reckon it could save that, but I still would be reluctant to be sort of overly heavily long Aussie till you see US dollar on a broad sense, so DXY, roll over and push back down. Particularly if we do see metals come down as well, because that's another thing that's sort of like, you know, you use these other proxies, and we see that you know, the one weakened into the end of the week, which obviously is not Aussie strength as a proxy. Copper's actually been holding up pretty well. I haven't actually looked at copper more recently, but quick look at that. I mean, that's, yeah, kind of rejecting again from its breakout levels. So I don't know. I'd be reluctant to be super long Aussie. It's been very resilient through a lot of the year. But, you know, you got, from a technical standpoint, you've got that big weekly resistance. You've got potential US dollar buying. The thing you do have in its favor, obviously, and you need to weigh up the two of them, is the RBA. So, you know, with the idea that that's happening on Tuesday, maybe some short-term strength into it. But I think once that's out of the way, you may sort of see whatever's happening with the US dollar as the dominant driver for the direction of Aussie. So open to the idea that, hey, they're going to hold rates. You see a little bit of a push up, but I don't think this is about to break above 66 cents and hold up there if the market decides to break out on DXY. So yeah, first little target is to close that gap and then see what happens with the market. Open to the idea that it could see some little short-term strength early into the week, just based on the fact that the RBA is on Tuesday. We see how we go with that. Moving forward, we've got silver. Now, silver's another one that, you know, I was saying the other day, I put a chart out here. So this price target was quite significant. We can see this has been an absolute beautiful sort of pullback and trade to the downside here. 16% off the highs. That is an incredible slapping. And I do think that potentially we see some upside. So similar to gold and that, I would like to see it back above all-time high. Purely for the fact that I think that mentally that'll drag a lot of people in. Like, that'll be like, oh, it was a fake out, but no, it's not. Well, you know what? You got to sort of look at it like the actual structure that we always say. You know, here's your move up. Whoops. Here's your resistance. You found support. We're in this leg here now. So it's, again, you just got to pick, well, what part of the structure you in? Well, we're in this leg here. We've had our pullback. We've hit our price target. I put a post up and I said, look, silver's going to cool a little bit here. Because, I mean, by cools, obviously, we're moving down, so cool off from the down move. And what has it done? It's bounced very well. I got a guy that I know and should have traded this like $3 this way. And then we traded, and he traded like $2 up straight, $2 straight up the next day or so. Oops, where's the little measurer? There's an 8% bounce. That's pretty big, man. 12% bounce. Should we get up to that 61%? And again, this is the sort of thing that I'm looking for, is that, oops, we're in this part of the structure, in my opinion now. Should this come into these levels over here, similar with gold, sort of come back, retest these levels, and this is a significant level because of the confluence here. So the confluence we have with this one is the head and shoulders neckline, depending where you draw it. Some people draw it right down here, but I've covered this a few times. If you look on a 4 hour, that's a lot better of a neckline, in my opinion. Yeah, a little bit of a shoot down over here, but these are wicks, and this is emotional trading. This is like, oh, emotional, bang, bang. It didn't hold, it didn't close there. To me, it wasn't significant enough. Hence why I put my level here. I put the post up at the time. We were at this level here, 52.40. I said, look, if we come down here, where's the confluence there? Well, the confluence is breaking the trend, breaking that horizontal, and you can see, bang, it just got absolutely pulverized since that broke. So to me, that's the neckline. So, and also it's the break, because it's obviously a confluence over here, it's a confluence over here as well, with the fact that this is the neckline. It's also the breakout level, breakdown level. So as you can see, so you got two parts of the market looking at here. It's also the 618 retracement. That's just factually correct. It's the 618 retracement up over here as well. So 51, I think, is good, because I think, look, if you get above all-time highs, you're going to get a bunch of people go, yeah, man, we're in all-time highs. Yeah. All their stops, they're going to be sitting over here. Quick little shoot up over here. Hit a bunch of the market that's like, yeah, cool, great, I'm going to sell it again, and you drive down here. And this leg will be the tell leg then for us, because, again, look at this with the structure. Here's one leg, here's the second leg, here's this leg. This is the sort of the third leg. Should they start to sell it down here, well, that's then technically put in a lower high. Your next move is this one to target these lows, and should that break through, well, then we're going lower. So I do think we are going lower, but as I said, we just given the structure of this, I do believe there is potential for upside moves before we do go lower. Again, look, these things could bounce, could dribble off and just come down from here. They could bounce and go all the way to the highs. I mean, anything is possible, but this is just this, from a structural standpoint, my sort of plan of attack with it all. So despite sort of US dollar being a typical inverse relationship to metals, and I'm expecting US dollar to go up, I'm open to the idea that US dollar runs up to 100. It's going to sell off there. That sell off there is then going to feed the metals market. Metals market's going to get a bit of a reprieve. I don't think 100 is going to be the high with DXY. I think it's going to be a sell point. So the flows will come out of DXY, they'll go into metals, they'll feed metals up to this level here till the market goes, you know what, we've pulled back enough from 100. Now we want to have that second effort into, and I always talk about that second effort, into 100. And if it breaks through there, this is the big play that happens. This is the move that happens then. And if we see DXY sort of break through 100, as I said, we had those other higher targets, that's going to really hammer the market there. So that's just my take on how the flows sort of will happen over the coming weeks. Could be months, could be into the end of the year actually. All right. So lastly, we'll have a quick squeeze around. As I said, I'll put copper on the back burner. It's just too choppy for me. I've been looking back at this level here. It's unable to close underneath 4.96. Breaks up higher, sells back. Breaks up higher, sells back deeper. It's just garbage, in my opinion, for the moment. Maybe you can drag something like this. Okay, I'll work with that one actually. Remove all this sort of stuff, clear it up a little bit. Takes a while sometimes for these charts to reveal themselves, but if we put that onto here, that's still the target. And why is that? Because we've actually got about 6 connections with this now. Close enough. Look at that. That's a lot of connections there. So it's quite a significant line that the market's obviously sort of working off. It's not enough, in my opinion, to sort of say, hey, look, we are going higher. I think, look, there's potential, of course, as I keep saying, there's potential for everything. But to me, it kind of feels like this high should have come up over here already. So, yeah, you're making new highs, but they're not coming significantly higher. As you can see, like, even if you sort of do that, that's not the line I would use, but I would use something probably more to that effect. Disregard this part here. I think that's just a bit of an emotional overthrow. But to me, that's starting to form a little bit more of something you can work off. About 8 touches in two in 2 bits there. But to me, that's looking like something a little bit more you can work off here. And how do you use this as an approach? Well, obviously, if you break this sort of line here, copper is one of these ones that likes to do fake out. So I would sort of be very cautious on the idea of first candles underneath this line as a breakout or breakdown. I would say maybe sort of take out this horizontal, this rising support, and whatever at the time, which is currently this, below those lows there, and I would say that's your trade. Should you want to trade this to the downside? But for me, I'm still holding off on copper. But copper is also a proxy for risk as well, and Aussie. So it's obviously quite a largely used industrial metal. And when do you use industrial metals? Well, obviously when things are good, or when things are good, you're expanding out and you're ramping up production. So there's the risk on factor. But should things sort of be a little bit slower, well, you got all this excess supply. What do you have to do with it? I've got to get rid of it. Well, what do? I sell it for cheaper. That's how it works. So should we see this thing break down underneath here, that could be a potential little trade. But again, probably more just as a proxy for Aussie, because Aussie is a risk asset. Risk off, Aussie sells off. Pretty straightforward. And then we got yuan held where it needed to hold very well. I mean, wow, right down to the lows down over here, and very big sharp recovery here. Question is it enough? Because as I said, it tried for that inverted head and shoulders, which obviously failed, broke down, but the bounce back here is quite significant, I think. So again, straight with US dollar strength potential coming in, I wouldn't be surprised if this move at least carries back up and targets this level over here now. That's where I'm looking. Back up at that 715. 715 is the breakout level for it. This is a weekly support through here. As you can see, you've had a couple of wicks have eaten into this level a couple of times. So there's a reversal. Obviously, we've got this big drop down underneath it here. But, look, I'm not completely sold that it's a bottom, but that does look, let's clear this stuff up a little bit. That out of here, that out of here. That big sort of push up into close has given it a bit of a nice little double bottom looking setup on the weekly. Again, 715, that's the breakout level. Above 715, you're targeting 719, and then sort of 722. But we've seen this do it for quite a while here. But the fact that it had every opportunity to break down here, and it didn't, it's quite a significant rising support on the weekly there as well, and it didn't. Again, short squeeze potential up over here. It's a bit different with the PBOC sort of being so heavily involved with sort of controlling the strength of the yuan. So short squeeze may not be as prevalent as you may have sort of see in other sort of currencies, but it's obviously still a bit of an opportunity there as well. And again, these things are just proxies.
You know what I mean? Like Aussie likes a stronger yuan. Look what's been happening since April. It came up here, it's been moving straight down. Choppy, but moving straight down. What's been happening with Aussie? Aussie's been hit its lows underneath 60 cents when this happened, and then Aussie's been choppy, but straight up. So should we see this thing break out and move above here, it's another reason that I wouldn't want to be necessarily at this stage heavily, well, certainly maybe not at this stage, but like certainly above this level here, I wouldn't want to be super heavy, or I wouldn't want to be long Aussie, put it that way. You get long Aussie as it comes back into these levels over here, where you may see a potential second move back down to those lows over there. All right, that's it for me.